Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned in live to the Investor Show, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. As you guys and girls can see, I got a very, very special guest on live here today, where some type of way he managed to build a $8 trillion conference that's aimed at diversity, equity, and inclusion. Now, we know all the controversy that's around diversity, equity, inclusion. We're going to talk about that and his summit, IDAC. How did he get here? Without further ado, let me bring in my guest today, Mr. Sam Alston, partner of NEPC and chairman of IDAC. How are you doing today, sir?
Doing fantastic, Prince. It's great to see you and to meet your audience.
Oh, definitely. So the first thing I wanted to say that I watched your last interview you did with Joe Blair on, I think it was Epic Humans podcast, right? And you guys got talking about financial literacy. And you guys did not say nothing about Prince Dykes Global Children Financial Literacy Foundation, and y'all was talking about financial literacy. Right. I was waiting for it, and I was watching. I said, "Now look at this."
What happened there?
We dropped the ball.
We dropped the ball.
Dropped the ball. Look at that.
My interest in financial literacy redoubled when I met you, Prince. Mm-hmm. When I found out what you were doing with Global Children's Financial Literacy Foundation, I made a personal commitment to it, and we're plugging in our financial literacy initiative with IDAC, the Investment Diversity Advisory Council, so that we can be a funnel for resources and to just provide educational background for young people to get involved in the finance industry.
Okay. So now I want to let you know current events right now today, this morning, right? We're going to talk about some of the people that are like, hey, DIE, diversity, equity, inclusion. As we get into that, some of the people like
hold on there, Prince. It's DEI, but somebody out there said DIE because it's not DEI because they're the cause of the window on the plane blowing out.
Oh, the window
because DEI should be DIE.
You're right. Let me correct that. DEI, diversity, equity, inclusion. You had Elon Musk, right? He said that he spoke out against DEI. You got people like Bill Ackman who said this is racism against the white people. You have Ron DeSantis, Florida. They just stopped public funds. They don't want Florida's like, hey, we don't want public funds to go to DEI. He described it as DEI as discriminatory, exclusion, and indoctrinating, right? So with these people, this came out, that's reported by the ABC from the Florida Board of Governors, right? They want to prohibit this. So you're seeing this big pushback that's coming against DEI. What do you have to say about these people coming out saying this?
Prince, I'm all about education. And when people say things that seem like they've not been educated on the subject, it's my responsibility, our organization's responsibility, to make sure that we explain what this is about, which is basically what America is founded on, meritocracy. We want the best talent in every organization that is producing results for our stakeholders. When we look at who those stakeholders are, particularly with pension plans, that includes workers, teachers, firemen, policemen. It includes workers that have put their blood, sweat, and tears into working for an organization and are blessed to have a retirement fund at the end. But that fund should be managed by the very best talent that's available. And Prince, our approach on this is the first philosophical construct that talent, latent talent, is equally distributed throughout the population. There are excellent people of all backgrounds, races, genders, ethnic backgrounds. There are mediocre people from every background. We want to find the best of the best and put them to work toward whatever it is in the financial industry that you're doing. If you're a commercial banker, an investment banker, an asset manager, a broker-dealer, if you're a financial planner, we want the very best talent so that we can get the very best results for those stakeholders. So this is about talent maximization. And I try not to get too concerned about the political baggage that gets attached to three little letters, DEI.
Okay. So now I want to ask you this. You put on a conference every year, IDAC, the Investment Diversity Advisory Council,
right?
IDAC, right? What is the AUM, assets under management in the room? How did you create this?
Well, at our last summit, in Chicago in September of 2023, Prince, and we were glad to have you there on the main stage telling people about Global Children's Financial Literacy Foundation. The assets represented in that room was about $8 trillion.
$8 trillion in a room, right?
Correct.
That people are controlling these assets. Now, when you say the people that are controlling these assets, who are these people?
Great question, because another part of what makes IDAC, Investment Diversity Advisory Council, special is that we felt this is about getting all the stakeholders around the table, recognizing that we all have a stake in finding the best talent from the mailroom to the boardroom of our organizations, including the portfolio managers, including the senior management of the firm, the best talent available. That's something that is a bottleneck that affects all of us. And if IDAC can bring the asset owners to the table, and I'll explain what these terms mean in a moment. If we can bring the investment consultants to the table, if we can bring the majority-owned asset management firms to the table, if we can bring the diverse-owned management firms to the table, and the lawyers, the accountants, the commercial bankers, the brokers, everyone that's involved that has a stake in the financial services industry, bring all of them to the table and say, we all have something that we can do to bring about bringing the 75% underrepresented talent into our business and finding the best of the best and putting them to work. We all have something to gain from it. So we brought all those people into the room. And if you allow me, I'll try to explain what those terms meant.
Definitely.
So asset owners would be pension funds. It would be endowments and foundations like colleges and universities. It would be family offices. It would be hospitals and healthcare organizations. It would be sovereign wealth funds representing different countries, Native American tribes. It would be all those people that have a pot of money to invest, whether that's $10 billion or $10 trillion, that money that they need to put to work in order to build a new hospital, to build a new dormitory for their endowment, for their college, to provide for the future of the country or the sovereign wealth fund that they're representing. So they're the asset owners, and they're looking for investors who are going to put their money to work. Those investors would be the majority-owned asset management firms. It would be the diverse-owned asset management firms. And the difference there is just that they're all trying to do the same thing, which is earn a great return on your money. The majority-owned firms, in general, happen to be larger and have been around longer. The women-owned, minority-owned, veteran-owned, neurodiverse-owned firms typically have not been around as long and are often smaller. But there are some fantastically successful diverse-owned firms that are of a scale and a size that is probably beyond what most of us in the audience would think about. So the asset owners want their money managed. They want to put it to work with these investment managers. Standing in between of the asset owners and the investment managers are these investment consultants. That's what my day job is. So you mentioned earlier that I'm a partner at NEPC. NEPC, which used to be called New England Pension Consultants, NEPC advises those asset owners on which asset managers they should be putting into their portfolio. So many of those asset managers will come. They will pitch their products to us. We will do due diligence to decide we think this is an excellent manager, whatever background you come from. This is a manager that we can recommend to those asset owners. Those are the major groups, and then there's this other industry participants group that includes professional services like accountants, lawyers, people that are involved in brokerage, commercial banking, investment banking.
Okay, so now when you look at the world, so you talked about that. You said you got these three pieces. You got that pipeline. You got the asset owners.
Correct.
You got the asset owners. Then in the middle, you have your consultants.
Correct.
Then on your right hand side, you have your investment managers, right?
Correct.
And NEPC is right there with 1.6 trillion. That's moving that needle, moving that capital. Now, I'm glad we have this because people hear this term now: private equity and private debt. Sovereign wealth. How does private equity companies become so big? How do they raise these billions of dollars that are out there, or hundreds of millions and billions of dollars? How does that happen?
Well, let's start with the basics that we're mostly familiar with publicly traded companies, McDonald's or General Motors, companies that you can buy and sell stock day in, day out on the stock exchanges. And those are well-known companies. There is another model which gained prominence starting in the 70s, but building strongly from the 90s and into the 2000s, of private equity, which means large investors saying, we're going to take this great idea of a company. We're not going to make it public where you can buy shares in it. We're going to buy it, say, at $10 billion. We can put in the sweat equity. We can give them better management models. We can make them more efficient. We can introduce them to new markets. We can make them a $20 billion company, turn around after 7 or 10 years and sell it for a large multiple of what you bought it for. That's private equity. Private debt is a little bit of a corollary.
Well, how do they get the money to be able to buy that $10 billion?
Well, again, investment management firms have a great deal of capital to put to work. So investment management firms can say, we believe we've got special talent. We've got people in our organization that know how to run, say, your restaurant business, or we know how to run your oil business better than you can run it. We're going to take you private, bring in our professionals who have dozens of years of experience doing what you do, but perhaps at a better run company, improve what you do, put our capital to work, because we believe that if we can improve that performance over time, there's going to be somebody else at the end of the rainbow, again, 10 years down the road, that will buy that company from us, and all of our sweat equity that we put in, it's going to be rewarded with outsized gains.
So you're saying, hey, you take this publicly traded company, make it private, polish it up, gut it, take out things that don't work, put in things that do work, put in good run people, better run people, and hey, now this company's worth $30 billion down the line, we want to sell it. Now, my thing that I want you to hit on, Sam, these private equity firms, they got to have money to do it, right? How are they getting that $10 billion?
Right. They're very wealthy individuals. There are pools of capital that will invest to say, we think you can do a great job. Prince Dyke's private equity company, we have faith in you. We're going to give you some equity capital, or we're going to loan you some money so that you now have that capital to put to work. And I want to be clear as well, there are different varieties of private equity. We don't want to get too far in the weeds, but what you said was take a public company, gut it. That's a buyout type strategy.
Yeah.
There's also venture capital, where you go to a new idea, a brand new company. Maybe they've only been funded in the past by family and friends, or angel investors, as they're called, that can give you, $50,000, $100,000, maybe $500,000 of capital. But you need $10 million to get to the next level. There are venture capital private equity companies that will go in and try to determine, we think this is going to be the next big thing, and we'll invest in that new company.
Okay, so now people are understanding what you're saying. People are like, okay, I got it. These private companies, because you did a very good job of breaking down the difference between the public market and then the private market, and how the private market is funded, and how people you see, like people, Robert F. Smith, who's from Denver here, who one day is going to be on the show,
right.
But he, how he became so successful. Like, where did this guy come from, right? So private equity companies, why do you never hear about them? Why is always this often the barely can maybe have a website, if that? Why is that? Why are they so private? Or private debt, the whole alternative market is so private.
Part of the concept is that publicly traded companies have to produce quarterly reports. They're very much in the public eye. So a lot of time, energy, paperwork goes into just reporting and making sure people understand why maybe you had earnings that were down this quarter because you wanted to reinvest in building a new factory. Private equity, you don't have to report that. So you do to your investors, but you don't to the public. So the idea is, we don't want to manage to quarterly earnings. We want to manage to what investments need to be made. Investments in people, investments in factories and facilities, investments in technology. What do we need to invest now, even though that's going to maybe put the earnings down for this quarter, but 3 years from now it's going to make us a much more valuable company. So the idea of private means we don't want necessarily everybody to know what we're doing until we roll out this finished product of a much better company that can then be sold.
And when you say that, I remember reading about Berkshire and Warren. He always say that. He was like, people used to every quarter on the public market. You got to do quarterly earnings.
Right.
Everybody's scrambling around.
Buffett with Berkshire Hathaway.
Yep, with Berkshire Hathaway. He always talk about quarter. So he puts his managers on a 3-year, time frame. You don't care about quarter to quarter because people will try to do things. Now that you gave a good layout of this market that people probably even know exists, what made you form IDEC? What made you get this brainchild, and how did you make this happen?
Right. Well, Prince, look, I came up from a lower middle class family down in Texas and got a public school education. And my parents, when they came up in the 1940s, they didn't have a lot of opportunity. Their opportunity set was to be a teacher, a nurse, a pastor. You didn't have the opportunity to go work for a large financial services firm. When I went off to college, I enjoyed investing. It was something that I thought was very interesting to me and a place where I could create value. And it was a meritocracy. If I was good at it, then I'd be recognized for that. So that always interested me. When I eventually came into the financial world, I was a portfolio manager for a company in New York City. Eventually got into the investment business as a consultant with NEPC, and wanted to make more opportunities available to people that were bright, brilliant people like you, Prince, that just needed exposure to the opportunity. Mm-hmm. And I realized, again, back to my concept, that 70 to 75% of the population has been historically underutilized, not just in the financial services industry, but in most industries. I think the numbers I last checked for African Americans in the financial services business is something like 6% versus 12% of the population. For Hispanics, it was 8%. Of the population, very much under the relative population for the whole country. And this is true globally as well, particularly with gender equity, that women are significantly underrepresented in this industry and in others. So I was thinking, how in the world do we give opportunities to bright young individuals who otherwise might not have been recruited from Harvard or Yale? Nothing wrong with those great schools, but they may have come up through a different path. How do we make sure that if there's a diamond in the rough there's a person that can really contribute as a star, how do we make sure they get that equal opportunity to participate? But this is about maximizing talent, which leads to maximizing returns for our investors, which leads to maximizing profits. It's not a do-gooder social program. Mm-hmm. It's how do we build better results for our stakeholders.
Okay. Like we had this conversation offline, right? Where we talked about people would say, you need to diversify. You're a portfolio manager, I own an RA myself, right? I have a foundation that have assets as well. Hey, you need to put these assets here or put these assets there to underrepresented areas. My thing is, hey, well, I can do that, but if my goal is not social responsiveness, what other why would I do that? So I know, for prime example, the Dow Jones, S&P 500, and the NASDAQ. I know those three indexes. Everybody knows its history or whatever. Somebody comes out with a new one. Right? Why? What incentivize a portfolio manager or anybody to diversify into something new? Is it just for a social cause, or is it really investment diversity? I don't know. How would you look at investment diversity, explaining that,
Right.
I'm kind of mixing my question up there, but
there are two related terms. They're not the same thing, but they come from the same root word. Mm-hmm. Diversification is one of the cardinal rules of investing, that you will have a better risk-adjusted return of your portfolio, meaning your returns and the volatility of those returns over time will be better with a diversified portfolio. So you don't want all your money just in one stock. As a matter of fact, you don't want it all in 50 stocks. You also should have perhaps some real estate in your portfolio, perhaps some bonds in your portfolio, perhaps some private credit or private equity in your portfolio. So that yields a better long-term risk-adjusted return, diversification. Diversity isn't exactly the same thing, but the concepts are related. That one of the big dangers of having people from the same background, on whatever dimension you want to measure it, diversity of thought, diversity of your experience working with different age groups, diversity of ethnicity, of race, diversity of gender, having the ability to have just only one of those groups in your decision-making tree leads to groupthink. And there's a fair amount of research on this demonstrating that diversity in the decision-making process leads to better results. Better results with the decision that you're working on, but also quite a bit of evidence that McKinsey and others have drawn out to demonstrate that diverse teams end up with better results in terms of profits for their companies than teams that are homogenous.
Okay. So now when you look at this, America's been around. This private equity, like you said, kind of got introduced into the 70s. Before I was even born. Everything has been going well. These companies like, hey, I've been with this firm. I've been doing it this way for the last 30, 40, 50 years. If it don't broke, don't fix it. Why? Why is it even important?
Right. Well, one of the maxims that I operate on, Prince, and I think a lot of other investors do as well, is that if you're investing in the same thing everybody else is, you're going to get the same results. Yeah. So I'm always on the lookout for new opportunities, new asset classes, new geographic places to invest, new investment managers. Again, if you got Prince Dyke's private equity company and you got a better sauce to work with, you got a special sauce, I want that. I don't care what your background is. If you're delivering something to me that's different from what the big players are providing, I want to know that. Also, a fair amount of evidence, Prince, that's been done demonstrating that in general, take the diversity element out of it, just based on size, that smaller funds and newer funds typically outperform funds that have been around for a long time and that are larger. Because as you get larger, typically you've got to raise more and more funds. You've got to raise a $50 billion fund. And putting all that money to work is very difficult to get different results than somebody that's more nimble. If you're a newer fund, now, of course, some newer funds fail. Some newer funds, they don't all do good. But in general, the results of a smaller, newer fund tend to be better in large part because you're hungrier. You know you've got to succeed with Fund 1 if you're ever going to get to Funds 2 and 3. Yeah. So you are incented to put your best ideas in there and to work harder than the next person to produce better results.
Okay. Now, what has been your biggest pushback with IDAC? What is your barriers that you see?
Right. Well, that goes back to some of the quotes you mentioned earlier that some people think, oh, well, this is a quota program, or, oh, this is
the new affirmative action.
Correct. New affirmative action, or people will have different comments on that. And they are people that we would want to sit down with and say, when you go field your football team, soccer team, baseball, basketball, do you want everybody that came from the same fraternity at your college because those are your buddies and you think alike and you get along well? Or do you want to find the best possible talent, put them on the field so that you can win championships? I often tell this story about the University of Alabama back in the late 1960s inviting University of Southern California, USC, to come out to Tuscaloosa to play them. At that time, all the schools in the Southeastern Conference and many other parts of the country were all white teams. So USC comes out with an African-American running back named Sam Bam Cunningham, and he runs all over the field on Bear Bryant's Alabama Crimson Tide. To his credit, the Bear said, okay, I can continue on with the status quo, or I can realize I need to fish in that other part of the population I haven't been fishing in to get the best talent on the field, because I don't want to get embarrassed by USC coming here next year or 2 years from now and beating us again. That was a business decision. It was not a social decision. When NFL teams are looking for who they want to put on the field, they go to the combine and they time you in the 40, they put you through the 3-cone drill, and it doesn't matter what your background is or where you came from. Do you have the best athleticism that we want on the field? Can you produce? That's what IDAC is about, making sure we give opportunities so that everyone that can produce, whether you're white, black, green, any gender or gender identity, if you're a person from a veteran's background like you are, Prince, person on the neurodiversity scale, if you can produce the results, put you on the field to produce investment results for the clients.
Now, we spoke about IDAC, with all the people that come in, Investment Diversity Advisory Council, $8 trillion of management assets in the room. What would make a company get involved with IDAC? Why are you guys convening?
Right. These are like-minded organizations, again, across the spectrum of every participant in the business, who realize our future is going to be built on finding that best talent. And if I can find it quicker than my competitor, I have an advantage. Pardon me, Prince. So the reason that most of us are in the room is to make sure that we are investing in the next generation of talent, finding talent from non-traditional sources. When I first met you, Prince, I was not aware of the Skill Bridge program from the military, where someone with 20 years of experience, chief petty officer, all kinds of great experience in problem solving, knows how to command a room, is an MBA. Most firms are not normally looking in that pond to fish from for the next generation of talent. So that was opening up a new opportunity for many of our firms to say, maybe there's some non-traditional sources of talent we need to find.
Okay. Now, when you look at, I want you to tell some of the people that's involved with IDAC so people can understand some of the names that's involved. Would you mind sharing some of those names? I know you're not going to list everybody. You're going to forget some, but at least give us a couple of people that's involved with IDAC.
There are hundreds of organizations. If I start listing a few, I'm going to get calls tomorrow morning from the other several hundred that I didn't mention. But they are the largest firms in many cases. They are some of the newest firms in cases. They are people that have retired from our industry but have the wisdom that they were pioneers and saw that there were hindrances to getting that best talent in place. Maybe they want to make sure that women have a better opportunity. So I'm going to decline to mention specific names, but certainly many of our sponsors' names are on our website.
Okay. So now from the asset manager, take me for, let's say, an everyday person, someone out there who has their portfolio, maybe a 401k, maybe a financial advisor for their house, I don't know, wealth manager, something like that. How can they help get behind that initiative if they find it interesting?
Right. Well, as I mentioned, one of the new initiatives this year is an emphasis on financial literacy. And we think that's a thing that individuals can get behind, financial planners can get behind, educational institutions can get behind. To my understanding, about half of the U.S. states require a financial literacy course for graduation from high school. And it's our belief that builds a more educated citizenry that is beneficial to all. It's not a blue state issue or a red state issue. It's about how do we educate people to create wealth for their own families? How do we educate young people about the opportunities in the financial services industry? That's a place that doesn't normally come up. If you're watching ESPN or you're watching videos on YouTube, you see certainly worthy celebrities that are out there who are well known and doing a great job and making a wonderful living for themselves and their families. You don't know that there are individuals in our industry who are worth more than those individuals, and to your point, they're not necessarily out there on the front page and not on SportsCenter. But this is an opportunity where somebody that's got a talent like you do, Prince, can put their talent to work, can, through the means of meritocracy, produce better results, and therefore get rewarded for it.
That's a very good thing there that you mentioned, because like you said, a lot of us don't even notice in the industry exist.
Right.
So one of the things that I wanted to talk about with you that I think that you've done very well, just from my observation, doesn't mean anything, but just from my observation, is that your ability, and I saw this with you mentioned this in your childhood, your ability to get along with everybody is a skill that most people don't have or don't know. You know how to take people from all walks of life, people high level, low level, whatever, and you know how to get along with everybody. And it's perfect for you being in your position, being a consultant that you are, right? So what is the skill, or how can somebody work on that?
Right.
Or how can somebody, I don't even know. You probably think like, hey, this is a regular thing, but that's a big skill that you have to be able to go into all these firms and, institutions, and I was about to say constitution, but institutions, and make that happen. What is that skill? What's that secret sauce, or what advice would you give for that?
Right. Prince, I don't know what it is that I'm going to use the word empathy, the ability to understand and want to listen to what another person's value proposition and what their pain points are, put myself into their shoes and understand how is this talent maximization issue affecting a large majority-owned firm? Why is it in their interest that they want to find better talent so that they can have a competitive advantage in the industry? I try to listen well, and I try to respond based on what is our common interest. We talk about this often at IDAC, that the 5 different groups, we call them cohorts, that I mentioned earlier, the asset owners, the investment consultants, diverse-owned asset managers, majority-owned asset managers, and other industry professionals, we all have our own circle of interest. We have things that we want to get done, and I believe that there is an overlap in the Venn diagram. Let's find the middle of those concentric circles where we all have an interest, and we call that area of shared interest talent maximization. But that's just part of what I grew up with, that I was always told everybody else is as important as you are, Sam, so you need to listen. There's always something you can learn from anyone that you meet, and you better try to get along with them on your way up the ladder, because you might meet them on the way down the ladder.
You never know. You never know who you're going to need in this world. People always say.
That's exactly right.
So now, like how we met, right? And us knowing each other and getting to know each other and seeing each other, multiple times in multiple, settings or whatever. For feedback, I always ask this: what are some things you see me do very well, and what are some areas of improvement, you would say?
Prince, when I first met you, it was at a private equity firm, and I was there because some of my investors invest with that firm. So I was there to hear what they had new to say about their investment teams and their what they thought was good for an investment over the next year, what were the areas they were going to shy away from. So I was there listening on behalf of my clients. I'm in the room for maybe 10 minutes when Mr. Prince Dykes walks in, looking like he owned the room. It's like, this fella is confident. He must be a longtime senior employee of this private equity firm. And indeed, you were still in the military and you were just there observing. But it struck me that you had a talent for connecting with people. You had a talent for understanding financial concepts with your MBA. You were a person that I thought, here's a perfect example of someone that gets overlooked in that 75% plus of the population that has talent but doesn't necessarily have equal opportunity to express that talent. So that stood out to me. And getting to know you, I realized that you were also a person that wanted to build something of your own. You didn't just want to go work for somebody else. You wanted to build something of your own. I was very impressed with that.
Okay. Now, what's some of my areas of improvement? What are some things you're like, you got to polish that? Or what would you say,
You talk a lot, Prince.
Hence to me being here now, talking to the podcast.
Exactly. No, I mean, I don't think you have a lot of areas to improve on, but the fact that you had been a problem solver for, was it 20 years? How long? 20 years in the military. My father and my grandfather were both in the military, so I knew what value comes from that there are everyday real world issues that might not get bubbled up to the captain or the colonel. It's the chief petty officer that's going to be the person to help an individual solve their issue. That's a big part of what you need in the financial services arena. So is there something you could work on? Be focused about what you talk about. Maybe, when you talk, people listen. But make sure it's focused on what it is that is their pain point.
Oh, that's very good. Finding that pain point. I heard you mention that a lot too. Finding that pain point, listening for people's pain point, and finding solutions to people's pain points. Right. I think that's something you do very well. Now, I gotta call you out on this, Sam.
All right.
How long you been in the industry?
You already called me out. You told me I forgot to mention global children's financial literacy in my last video.
But how long you been in the financial service industry?
32 years.
32 years. I'm in my 30s.
Yes.
So why is it now everybody's like financial literacy for kids? It makes perfect sense.
Right.
Why is that now?
Right. Prince, look, I believe that when you have a platform, you've earned respect in the industry, you need to give back. You can't give back a lot if you haven't earned that that respect in the industry. So I believe that my first experience with financial literacy started in 1993 or 1994 when I created a program that's owned by the National Association of Securities Professionals. NASP is another organization that's focused on women and minorities in the financial services industry. I was the founding president of the New York chapter of NASP back in 1993, and about a year later, in 94, created something called the Fast Track program, Finance and Scholastic Training Track, which was intended to introduce high school students to concepts of financial literacy, connect them with movers and shakers in the financial world. I was still a young pup in the industry, so I didn't know as many movers and shakers then as I know now. But those that I did know and people that I could ask to tap their networks, we would bring in CEOs and chief investment officers and head traders to meet with these high school students from Brooklyn and the Bronx. These were kids that at that time, in the early 90s, their connection to finance was, seeing some bright gleaming towers, skyscrapers over in Manhattan in the distance if they were in Brooklyn. Maybe they'd go to the bank to withdraw some money with their parents, or they'd go to a payday loan place, but they didn't know what went on in those towers over in Manhattan. I wanted to roll out the red carpet and make them feel welcome and that they had the opportunity to come and work for those firms or to build firms of their own that could compete with them. So not Johnny come lately to the financial literacy world. Fast Track is still around 30 years later. Yeah. I manage the Fast Track NorCal program in the San Francisco Bay Area. And not right now trying to get every firm within IDAC to see that it's in our interest to teach financial literacy and to provide opportunities through internships, through programs to build and promote the curriculum of finance at some of the universities. That's in our interest because it's our next generation to produce profits.
Okay. So also, because, I've noticed, probably in like the last 2-3 years, I started on my journey from a personal note, right. Just, myself, doing everything myself. And, I was always wondering, why nobody teaches you this in school? Why nobody talks about investing and credit and insurance and real estate and
right.
taxes?
Compound interest.
Yeah, those at a young age. We're all going to walk into this. Why we just wait until you do this? So now that I'm kind of seeing the industry in like the last 3 to 5 years strong, I've seen the industry kind of start to shift, and I'm hearing that catchphrase, financial literacy, financial right. education, right. educate the kids and invest for your kids. And those conversations I didn't hear, probably about 20 years ago. So I always find that interesting in what I started to change.
Right.
Now, your young self, you're talking about Sam at Boston College.
Boston University.
Boston University.
Big difference, right?
Well, was it Boston College back then?
Nope. Boston University Terriers, different school from Boston, different school than Boston College.
So Boston University, right? Yes. So yeah, Boston University. Young Sam, right? What would you today tell young Sam that's in Boston University?
Right. You stayed up to midnight doing your work, stay up to 2 a.m. You got to work harder. You got to put more effort and sweat equity into it in order to make sure that you are airtight with your knowledge of the subject matter. If you're going into the class the next day, your knowledge in the interview when you go down to New York or you go to Denver or you go to LA or Chicago for an interview, that you are prepared. Having a broader network, Prince, making sure that you have informational interviews with leaders like a Warren Buffett or a leader of the local company that's in your town. that gives you an idea that you're not coming in to ask for anything. You just want to practice. You want to understand what is it they're looking for in a candidate, and how can you best articulate your competitive advantage that's going to add to them. Those are the two things that I think I had some semblance of, because maybe my classmates were going to bed at 10 and I was going to bed at 12. I should have stayed up even longer, till 2 a.m. to make sure that I was even sharper and that I was ready for the world of finance.
Now, younger people, right? You spoke about this, about younger people, the advice you would give them, or your younger self. I think everybody's willing to work, not everybody, but majority of people are willing to work hard. They just don't know what to work hard at.
Right.
So all my guests, I always ask them for an evaluation of me. Right. And I say, hey, no bluff. I know we're on camera or whatever, but what are some of my areas of improvement? What are some things? And, you met some of my prior guests. Some gave me awesome ideas.
Right.
One of the things I picked up in his interview was talking to people's pain points.
Right.
I'm a natural talker.
Right.
That's why I'm here today.
Yes, you are.
Right. I'm a natural talker. My mom loved to talk.
Yes.
My dad loved to talk.
Right.
So naturally, I didn't know it, but I love to talk. I love to talk to people all the time. So sometimes when you're up late at night and you're working, what would you tell that young professional? What should they be working on? What should they be working towards?
Right.
Because some people, they listen to this now. They're watching this like, man, I'll do the work if I know I'm going to get the reward. But where do I need to work?
Right. Understand what the other party needs and wants. That's another way of saying pain point. What is their need? So you got to listen as much as you talk, so you understand what it is, what problem they're trying to solve for. To the extent that you have something to offer that can help them solve that problem, you've worked smarter. You didn't have to work harder. Yet the working harder part is you got to find out what it is their need. So I think that is a critical part of success for young people coming up today. It's critical for people that are mid-career. Listen first, talk to how you can be a solution for them. And listening isn't that hard. People love to talk about themselves. So if you can get them talking about their background, what do they do every day? What are the things that keep them from being more effective? If it's not being able to have enough time with their family, what are the things that bother them? And talk about how you can be a solution for that. If I could take 40% of that work off of your plate, because I've proven in my academic career, I've proven in my prior job that I can solve that kind of problem for you. I've got some technical expertise, and that gave you 40% more time with your family. How would that make you feel? Madam Boss, Mr. Boss. That turning the conversation to how you can solve it for them is what I would recommend.
Okay. Now, going forward, how do you feel technology? We hear AI. You got AI now. You got ChatGPT. You got all the other stuff. Now it's become my friend. Right? How do you feel something like technology will impact diversity, equity, inclusion?
Right. Well, first of all, Prince, we always overestimate the immediate impact of new technology, and we tend to underestimate the long-term impact. I think AI is going to have significant impact on our economy, on our labor force, on what we get trained to be good at. I believe that to the extent we embrace change, we can get ahead of change. I think the folks that fall behind are the people that say, there's this train coming at me and I don't know what I'm going to do, but I'm still standing here in the middle of the tracks. Get out of the middle of the tracks and figure out how can you take advantage of this situation. Is there something you can put on the train to get transported to the distribution point for your product? Don't just stand there and get run over by it. Learn how can you learn about this new technology and put it to your benefit.
Okay. Now, the thing I see about IDAC that may be a concern, everyday people, it's mostly institutions that can support. How can an everyday person, right? Because I want to make this as clear that,
Sure.
Going to your summit is not open to the public, right? Like everybody just can't be like, oh, wow, I heard this summit's going on. There's trillions of dollars here. I'm just going to, here I am, right?
Doesn't quite work like that.
Yeah, don't kind of work like that.
Right.
And also, when I'm just a regular person, I'm just a small fry.
Right.
I can't afford to go to IDAC.
Right.
You know, these corporations are backing them. How can I
Every
how can I
year
get involved
we
in sports?
invite students from the local location of the summit to come in to have an opportunity. They have their own track where leaders in the industry can talk to them about opportunities and what they need to be studying and what internships they need to be going for, how to go about positioning yourself for success. So that will be the case in Denver as well. So to the extent that there are schools out there that would like to have their participants play a part in that summit, we'd love to connect with them. And some of our summit planning individuals are in the process of doing that.
Okay. So what's your vision in 5 to 10 years? What will be you could sit back and rest your laurels on IDAC. What would that be?
We have 2 measurable goals in IDAC, and this does set us apart from some organizations out there, because it's not just kumbaya or we want everybody to feel better or we want to be in a better place next year than this year. We have said that over the next decade, we want to bring 10,000 new prepared individuals from underrepresented groups into our industry, the financial services industry writ broadly. We've said that over the next half decade, we want to double the amount of business that's done in the financial services industry by minority-owned, women-owned, veteran-owned firms. So those are very tangible things that are stretch goals, that it's going to require some pain from each of the participants in IDAC to say, what can we do that is not necessarily in our comfort zone or our status quo? What can we change that would make these opportunities more available? So those are the 2 things that we have as medium-term goals over the next half decade and decade. Over a period that goes beyond my horizon, Prince, it's my hope that this industry and every other industry in the United States and globally adopts the idea that while it may not be as comfortable to hire your best buddy, we want to make sure that each industry is focused on saying we want to utilize every amount of talent in our population in this country and in other countries.
Nice. So is there, like, I want to make sure people understand this. I have a lot of friends, in the industry, got to know a good bit of people. And I don't want people to think that, like, hey, I never tell anybody, hey, I'm a black business.
Right.
I tell people, hey, I'm a business that just so happens to be black, right? And I don't want you to just do business with me.
Focus on excellence.
Exactly. The business. Now, what would be your advice to someone who feel like they're on the outside? Hey, I'm this small firm, or I'm someone who doesn't have the ideal track.
Right.
I maybe went to school for this or that.
Right.
And man, I see this. I would love to do this.
Right.
What would be your advice to that person who feels like they're on the outside and they maybe feel like they're Johnny come lately?
Right. Hone your technical skills first. Do not go out there saying, I am Johnny come lately producing the same product as Acme down the street. Articulate what your expertise is and make sure you've got the technical toolkit to back it up. If you do that and build your network where you can connect with people like IDAC that can get you introduced to firms that might want to work with you as a vendor or as an employee or be an investor in your business in helping to build what you have. But if you come to the table with a commoditized product or service, no one's going to pay any attention to that.
Why won't they pay any attention to it?
I don't have time for that, man. I need people that are excellent and have a new idea, a fresh idea that can add to the distinctiveness that we provide to our clients. I'm not going to go to my client with some subpar firm or product or somebody that doesn't pay attention to the room around them, maybe comes in and ignores the receptionist or ignores the people serving the food. That gives me a big clue into the type of management style that you have, which is not likely to be conducive for long-term good results.
It was just like we kind of talked about this off the screen when I was saying this when we was up at PG, how when we was getting ready to leave, all those people were just workers. They was probably just getting done with another conference. Like, oh, Prince, man, good to see you. Because I would go in, but you're 100% right. I watch people to see how do you treat people who you feel like can't do anything for you.
That is a key indicator.
A key indicator. So sometimes I always like to look at people and say, like I don't have anything, I don't have any resources, nothing, and I see how I'm treated, right? And then I can see, hey, if I show your hand, it's like, because everybody wants to be around you when you go out there and say,
you got something.
Hey, you got this back, and hey, let's go out, let's go golf, and you can go here, let's go hang out. So I like genuine people, and that's something I learned from Warren when he taught me about character.
Right.
I remember telling Warren, I was like, man, there's some people here. These guys got hundreds of millions of dollars. They want to meet with you. They want to talk with you or whatever. And, would you talk to me? I'm a regular Joe Blow. He said, quit looking at people's money. Look at people's character. Because you can always fix money problems. You can't fix character problems. So I've always taken that aspect throughout life. So to look at people who are genuinely looking to help you and willing to help you, not always coming there with a plate all the time, like, hey, put it on my plate, but they're looking to bring something to your table. And people always ask me, they look at my network, man, your network is so vast, and these people got billions, billionaires, because the thing I always do is I always bring them something.
Right.
They know that, hey, when Prince comes, he's going to bring me something, he's going to give me something, he's going to add some type of value, and once I add the value, because once I show my worth, then everybody behind me, or they'll see it.
Right. I
don't have to say a whole lot. They'll come in, they'll see it, they'll say, you know what? I think I'm going to keep this guy around. I might save his number.
So you're the perfect example. Have the technical skills.
Yeah.
Have the ability to articulate your advantage, bring them value add, and be connected to a great network. That's you, Prince.
And people ask me too, they say, well, Prince, I didn't know you had a firm, RA, because I'm in the back figuring out my sauce.
Right.
You can't go, like you said it, you can't go in there with some, hey, I'm Prince, so here I am. You got to have a sauce and ingredients. You got to know the right salt,
proportions,
pepper,
right? Yeah.
this, that, or whatever, because money is green.
Out of a can, right?
You don't want nothing in the can. Exactly. I can't come in there with, hey, here's some ragu sauce I got out of Walmart, and here's some noodles that I got out of Walmart, and hey, you want some spaghetti? It's special.
Right.
No, you coming up with your own little thing.
Exactly.
You're trying to find your way and to know your way the right way. That's what I've always spent my time, because, I've never been a money person. I've never been like, I got to have money. It's about money to me. I need it to survive. Mm-hmm. And I learned, and I sit down with my wife all the time, and I always tell her, I'm like, sometimes I feel like I'm just possessed with what I do. Like, why am I staying up this late? Why am I working this hard? Right. She'll see me walk out the door and be like, you going somewhere again? Where you going now? Right. Come back in out, like, why do you? And I say, sometimes, and when people tell my story sometimes, they're like, how did you do that much work, in this amount of time?
Right.
And I look back and I'm like, well, how did I do that? That's how I know it's a calling, one, to like, this is what I'm supposed to do. Right. But I think that I like to be successful at whatever I do. So I'm just genuine, and I just say, hey, how can I make this thing or whatever I do successful and even more successful? So,
well, Prince, help me with the name Sweetness, the running back for Chicago Bears.
Walter Payton.
Walter Payton used to say, everybody says they want to win championships, but everybody not out here running these stairs with me in the off season, up and down and up and down. So your willingness to do that work on your special sauce pays dividends. And I'm not saying that you should take time away from your family.
Yeah.
But I had to be up at 2:30 this morning to prepare for a 4:30 a.m. call with investors in Africa that I met back in November that I'm bringing to the United States next week to introduce to some of our clients. But I needed to be prepared if I was going to be on my game at 4:30 in the morning. I was willing to run those steps. You're willing to run those steps like Walter Payton did. And everybody's like, yeah, I want to be a winner. But you got to put in the work. You got to have the technical tools to succeed.
So make sure you got that secret sauce.
Make sure you got the sauce, man. Ragu's good, but you can do better in your own kitchen.
I want to ask you this question too. And it's also sacrifice is what people are not able to make. So your childhood, right? It was a little different, discovering that, you was actually adopted.
That's correct.
Right? You was adopted and coming out of
Which
Texas.
Didn't mean anything to me until people started teasing me about it.
Oh, why did they start teasing?
I thought, that means I'm special. I was always told you were chosen. I didn't know that there was any stigma attached to it until people started teasing me about it around fourth grade.
Now, did you ever try to find your biological parents and to figure out who they were? Did you ever meet them?
No, I mean, obviously, with all the DNA and ancestry tools that are out there now, one can certainly look at who you're most closely related to, but I've never reached out at this point. I love the parents I grew up with. They've both passed away now,
wow.
but they trained me up right, and they are my parents.
Wow. Okay. Well, and, how do you think that itself, like having that type of background and story, relates to who you became?
Wow. Well, I do believe that just falling into something because you have a genetic tie to somebody that already had the door open for them,
Mm-hmm.
I don't begrudge people that, but those who have to be chosen because they came from outside of that genetic stock, let's say, or they came from outside of that lineage of Ivy League attendance for 5 generations, they generally have to work a little bit harder. But I have so many examples of individuals who have done it. People of every background, white, brown, black, yellow. And I respect that a great deal because I feel that my situation was I needed to find a path to success that was right for me, not necessarily follow what somebody else did. Again, the opportunity set for my parents was not broad enough to encompass the halls of Wall Street or private equity firms. I had to go out and earn that for myself, but the character behind it,
Mm-hmm.
the listening skills, the aiming for the pain points, the building your network. It's not just not just what you know, it's who you know. Those are the things that my parents taught me that were valuable tools throughout my career.
Networking. What are some keys to networking? I don't have anything. I'm just a regular guy or whatever, and I want to network. What are your keys to networking?
Well, I'll tell your audience, he's not a regular guy. He's about the best networker I've ever seen in my life. The guy can work a room. But to the extent that you put yourself out there to people that you don't normally hang out with, people that may have a different philosophical persuasion, a different political persuasion, different religious background, different career track than anybody that you've been with. Seek those people out. Ask them, tell me your life story. How did you get here? What's your journey? I remember going to an organization in my town out in California, and there was an older lady there, and I'm new to the group. And first thing she walks up to me, she says, "So what's your story?" And you could be offended by that, but it drew me in, and I wanted to get to know her. And I probably don't phrase it quite like that, but I certainly make it a point that if I see someone in a room from a different background, I want to know more about their story. And when you show interest and want others to talk, they'll generally talk. They'll generally comply. They want to talk about themselves. There's always something you're going to learn from that. And to the extent that you follow up on that tie, then it wasn't just a one-off thing. It becomes part of your network when you followed up on it.
Now, what makes it difficult? Say somebody who's an introvert. I naturally my wife is a total opposite for me. Introverted, whatever. People always, and Wesley's kind of that way too. I was on the phone with Bank of America yesterday. They said, "How does Wesley feel about being famous?" I'm like, care less, right? So, someone who's naturally introverted, but they need to network.
Right.
How do you tell them?
Right. Well,
What would you tell them?
I would say that my son is not as much of an extrovert as I am, but he has more of that empathy gene than I have. So he is fabulous at getting along with everybody, way better than I am. And he does it from the perspective of being more introverted than I am. I think he's learned that there's value in listening to other perspectives that's going to give him the kind of depth as a person and ability to relate with other people down the road. So he'll go out of his way to talk with people, but mostly he'll listen and make sure he doesn't judge them. He just wants to know, how did they come to that perspective? So he's an introvert, and he does it quite well.
How do you teach empathy?
I don't think you can teach it, man. That's got to be in here. I think you watch babies, 2-year-olds, 18-month-olds. We're generally very self-absorbed in what I want right now. So I don't know at what point we start to be as concerned about others' needs. But I remember from a relatively young age that I wanted other people to be comfortable. I want to make sure, if I had some food and somebody else didn't, I was sharing it with them. I wanted to make sure that if somebody always got picked last in street ball, that I would want them on my team and try to encourage them a little bit. I have no idea where that comes from, but it's certainly a precursor to being able to network well and being able to utilize a net. You can build a network and never capitalize on it. Being able to capitalize on the network, it does require that you care not just about what I need, but you're also interested in what they need.
You made a good point there. There's a difference. I was telling people about this too. There's a difference between having a network and then be able to, I don't know if you've seen this, people who know a bunch of people,
right,
but they can't get anything done. Or they can't get anything done. How is that? How can you network and know all these people, but you can't raise capital, you can't get anything done? So what is that? Is it, and I've seen that even on my personal life, right?
Right.
I've seen people who watch me, know me, love everything I do, tell me they can go on or whatever, but they haven't flipped the switch on like, you know what, I need to get behind this guy. Right. Are you not being assertive enough? Are you, or is it time?
Right.
Or is it something on your end? Or what do you think that is?
It's a learned skill, man. It's very much back to Walter Payton running those steps. You can show up at spring practice and say, yeah, I want to be the lead running back next year, but I'm heading to the fast food place to chow down with my friends. I'm partying until 3:00 at night, and I'll just, but they owe it to me. They need to give me that spot. You've got to learn how to build a network, and then there's a whole nother skill to learn of how to leverage that skill set into action.
And what is that? What is that called? That second level. It's that second, it's that, hey, I'm network. I know all the people. I went to all the.
It's the Prince Dykes gene.
Because people ask me, like, hey, I was telling you about discovering that process.
Right.
Jay was telling me, Prince, you never talk about your process. Right. How are you doing this? How did you get here? And they say, man, you're a good networker. But I'm like, it's another level behind networking.
That's right.
It's one thing to be like, hey, yeah, I went to this conference and I met a bunch of people.
Right.
But another thing to get a phone call,
right,
to get the personal sale,
right,
for you guys to exchange on another level, and then it's a whole nother level that the person say, hey, I want to get behind what you're doing.
Right.
So it's, I don't know what that's called.
Prince, I don't know what it's called, but I can give you some examples.
Okay.
And one of the easiest ones, and it stands out because no one else does it anymore. And yeah, y'all can say that's an old guy saying that. Those who do follow up, the easiest way to follow up is with an email or a text. Send somebody a video on the gram. That's cool. But to the extent that you write a handwritten note to someone and put it in the old school U.S. mail and send it to them, everything that comes in the mail is bad news. It's a bill or it's something you didn't want to know about. Property taxes going up, whatever. I got a personal note from Prince Dykes that is right there, stands you out from 1,000 other people that they've met.
Wow.
And they're going to remember that. What did it cost you? What does a stamp cost these days? 59 cents, something like that. 60 cents. It costs you 30 seconds to write out a note, and you've already set yourself apart from 1,000 other candidates.
That's a very good point. I did that for all my clients last year. I did write out, but I only got about like 20 clients, but I wrote them all a handwritten note or whatever. And I was going to be 100% honest. My wife wrote them. I just signed them.
Whatever it takes.
She wrote them.
God bless her. Yeah.
I just told her, because when I tried to write, she's like, this is horrible. No,
right.
I'll do it.
Right.
So she write it. Then I'll sign it and make sure
those clients remember that.
Yeah.
And those 20 clients will stay with you as you add another 20 clients. Don't take it for granted.
That's a very good point. Y'all hear that out there. I want to get the wide shot on this because I want you guys to hear that things that set you apart, taking it back the old school way to just writing somebody a letter could go a whole lot further than anything else.
Right.
And another key thing that I saw that people always talk about, they always try to figure out, hey, how do I get in contact with people? How do I do things with people? How do I figure out? And it went back to, I was listening to, I think his name is Tim. I can't think of Tim's last name. He's one of Warren Buffett's, investment advisors, right? And he said, you know what? Back in the day, everybody read the newspaper. Everybody read the Wall Street Journal. Everybody had the Wall Street Journal. And with this Wall Street Journal, everybody thought the same. Right. Everybody in the morning, they'll wake up, they get the coffee, everybody read the Wall Street Journal, and they knew exactly, everybody would say the same thing, regurgitate the same thing, everything. He said now people have moved so far away from newspapers that now reading a newspaper can give you an edge on the market.
That's right.
Because he said everybody now is wake up, they watch the 5 top things that CNBC says, or the 5 top things that Yahoo Finance says, or Market Watch, or they may tune on the Fox Business or whatever, and we all think the same. He said nobody's picking up a newspaper no more. Right. So he said by subscribing to a newspaper and reading the newspaper, you actually can catch gems out of the newspaper now. And I thought that was so funny to hear him make that analogy of taking it back to the old school where that you think is dead,
right?
It's actually an edge now, and you just brought that in full circle with saying if you just sit down and just write a letter,
right? It doesn't even have to be a letter.
Yeah.
It could be just a note saying I was impressed by the opportunity to meet you. I learned a great deal. Would love to have an opportunity to have an informational interview at your convenience.
I used to get those letters when I was consulting.
Mm-hmm.
When I was at NEPC, I got letters and handwritten letters from firms. I don't get that no more.
It's amazing how it stops.
I know, right?
You're a consultant. That's
right. You're not consulting no more? Whatever, dude.
Yeah.
So, but it was like when I was consulting, I got letters. So,
but Prince, I think it's also important just to not just read newspapers, to read in general.
Yeah, that's true.
Read books, read articles. Again, that's another way of putting yourself in someone else's shoes. This is back to that empathy gene. Understanding another perspective that you may not have thought of. And you'll be surprised how some concept from a book you've read or an article you've read comes up in a conversation and it connects with people.
Especially if they read that book or they're familiar
they happen
with
to have read the same book.
Because nobody reads anymore.
That's right.
So the person that picks up a book and say, hey, I heard of that and I've seen that,
right,
that automatically has that common ground.
Right.
Well, Sam, it's been a pleasure.
It's been an honor.
You know what? I got to say this. If people want to reach out, people want to follow you, how do they get in contact with you?
Wow. Go to www.idac.net and find out about what IDAC is doing. And there are big things coming down the pike with that, including this summit that will be held here in Denver in September.
Okay. Is there anything that we forgot or we didn't mention that you would like to share with the audience?
Prince, I found you never forget anything, man. You're always on your game. You're prepared. You covered a lot of territory in a short time.
Okay.
Yeah.
Well, guys, girls, thank you for tuning in. Until the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe, my name is Prince Stacks. This is The Investor Show. Peace. Be safe. I'm out. And